Welcome, guys, to Crypto IO. This is a brand new channel focused on Bitcoin and cryptocurrencies. And my goal with this channel is just to be able to explain what Bitcoin is, why it matters, why cryptocurrencies are important. On the first video, we're going to focus on Bitcoin, and it's not going to be a technical video, so we're not going to talk about how Bitcoin works. Instead, I'm going to focus more on speaking about why I think that Bitcoin is important in this world and why everybody should own just if you don't believe in it, maybe having a small allocation in your portfolio would be a smart choice. So stick around. As a reminder, none of the information provided in this channel is financial or investment advice. I am not a financial planner, so please reach out to a licensed financial planner in your jurisdiction if you're looking for financial advice. Okay, the first issue we're going to be talking about is the debt bubble. And this is a problem that is not only in the United States, but most of the countries around the world suffer from high levels of debt. So first, we're going to look at the United States, and we can see that the debt over time, especially since 2001, has been growing steadily year over year, nonstop. Now, we saw a spike over here during the COVID pandemic, and now that we are entering a recession, during recession times, the income that the government receives goes down, but the expenses stay the same or many times go higher. And many times the government ends up spending money just to get out of the recession. So, with the recession coming, it seems more likely that the government is going to end up spending more money and just make the debt go even higher. And we can see right here. So the gray areas are during the recession. So we have the 2001 2002 recession. We don't see a huge debt growth in there, but 08 09 there was a big spike. Of course, we saw the tiny little recession during COVID. There was also a spike. And when we look at it from a debt to GDP ratio, we can also see how during the recession time it went up, and then uh, right before it, so 2019, 2020, it went up once again. Now, as you can see, currently we're at somewhere around 130% debt to GDP ratio, and this has been the highest ever in the United States. The only other time that we got close to it, or to these levels, was right after World War II, where the debt to GDP ratio was at 120%. So we have since shot past it. Now, it is because of COVID. So there was, a pandemic that forced, or you could say that caused the government to spend a lot more money to try and protect us or get us out of the pandemic. But as you can see, even before the pandemic, we still had a debt to GDP ratio close to 110, and that was steadily going up. So it would have ended up at probably 120 uh, naturally without a pandemic either way. Now, this is a different graph just showing the deficit spending, and we can see essentially since 2002, the United States has always had a deficit. So 2001 was the last year that we had a surplus in the government budget, and we can see that whenever we have a recession, that's normally when the government chooses to spend money because they want to fight the recession. They want to get us out of the recession and back into a economic growth. So you can see 08 or 09, there was a huge deficit spending. COVID, we also saw the deficit grow, and it hasn't been officially declared, but we already had Q1 of 2022 with negative GDP growth. And based on forward indicators, it's looking like quarter two is also going to be a either zero growth or negative growth, which would officially put us in a recession. So soon, in a couple of weeks here, we will find out whether or not we're officially in a recession. And in a couple of weeks or months, that might cause another surplus of government spending in order to get us out of it. Now, this portion just shows how the interest expense weighs on the government's budget. So currently, the government spends about $500 billion just in interest on its debt. Now, this was before, so 2021, this was before the Federal Reserve started hiking up rates. So, as you can imagine, now this number has grown substantially as rates continue to go higher and higher. And a lot of the debt is in short term. So, I believe it was somewhere around $10 trillion is revolving short term debt. So, $10 trillion gets revolved each year. So, that 10 trillion, those new treasuries or bonds would be at a much higher interest rate. So the interest expense is going to continue to grow as interest rates stay higher, and they continue to go higher as the Fed fights inflation in these coming months. So this is going to be a burden, a huge burden on the government that it may not be able to sustain. So sooner or later, I think we're going to be seeing some kind of yield curve control, and that's essentially just saying that they're going to force a specific interest rate on treasuries and bonds, so the interest doesn't go higher than that, which normally is seen as a really bad thing. And Japan's been doing that for many years, and recently they've been unable to maintain the yield curve control. So that's just saying that the market does not accept uh, the fixed price on their interest, and because of that, the yen saw a massive collapse in its value. Now, if we look at other countries, so as I was saying before, the U.S. is not the only country that has this issue. In fact, there's many more that have a much bigger problems. And here we see a list of different countries, and it's sorted by the debt to GDP ratio that they have. So Venezuela has the highest at 350%. Japan is pretty high as well. Sudan, Greece, Lebanon. I mean, you can just see the list. And the United States is not too far off over there, somewhere like 10th place. Just taking a guess in here. Now the issue is whenever a nation reaches the 200%, so once it gets really high, above or close to 200%, uh, their currency has a really high probability. So just historically speaking, to go into hyperinflation. And once it enters hyperinflation, the value of that currency just gets decimated. So anybody holding that currency has savings in that currency just loses a lot of their savings and net worth. So it is extremely dangerous for debt to rise to extremely high levels, and nations need to be very careful. And when we look at the just examples of fiat currencies, we can see that just the U.S. dollar since 1900, it has lost about 99% of its purchasing value. So fiat currencies like the dollar or the peso or euro, so all of those are fiat currencies. They lose value over time. And here we just see some quick examples of some old currencies that essentially just have disappeared. The government ended up issuing a new currency instead, or to replace them. And there are quite a few, quite quite a few. Now, I know what you're probably thinking is, and that might be okay, Ivan. So the U.S. has a lot of debt. The countries around the world have a ton of debt. But why does that matter? How does that affect me? And the simplest way that I can put it is that eventually the debt has to be either paid off or it has to be written off. So, in my personal opinion, there's three ways that we could see this happening. The first one would be if the government decides to reduce spending substantially. So it would have to see some major budget cuts and also increase taxes. But increasing taxes normally is not effective. People find ways to avoid paying taxes or just find different ways to shelter themselves from the taxes. So an increase in taxes rarely actually gives more money towards the government. So and that's not really a good option. So the first one, the reduction in spending, which is the best option that the government could do, it's highly unlikely. And at least here in the United States, with our two political system that we have going on, they're always a gridlock, and they never want to agree on anything. So they would never want to cut spending on something that either side supports. The last time we saw a budget cut was during the Obama administration, and that was a huge fight for them to be able to reduce spending, and it was very, very small. So it didn't even make an impact in the entire budget or the spending as a whole. So, fortunately, choice number one, reduce spending, highly, highly unlikely with our current political system. Choice number two, in my opinion, would be default. So this would mean that the U.S. government decides that they were not going to pay back its debts, and this would cause a major, major global recession, most likely a depression, because most nations or sovereigns, banks across the world, they store a lot of their assets in U.S. bonds and treasuries, and this would just decimate a lot of the wealth and savings that other nations have, as well as the savings within the U.S. Now, in the past, countries that default, they've done different ways of defaulting on its debt. Now, the government could choose to just default on foreign debt, so it would still cover the national side. But nonetheless, whatever choice or way they structured the default, it would still lead to a massive recession globally, just because the U.S. is the global reserve currency. It would lose the trust in the global reserve status. So it would be very chaotic. It likely would be the fastest way to fix the issue, but it's also very, very unlikely. No politician wants to go. Uh, no politician wants to vote for default. They don't want to even discuss it or bring it up because it would be a huge and just terrible precedent across the world. So default is also a highly, highly unlikely choice. Now, the last one, which is the most realistic choice, is the debasement of the currency. And the debasement of the currency is something that, well, it has happened. It always happens. As I showed you earlier with the graph of the purchasing power of the US dollar, we've seen that since 1900, the US dollar has lost 99% of its purchasing power. So this is essentially debasement. It just makes the fiat currency lose the purchasing power over time, which makes it easier to pay off all their debt. This is one of the reasons that governments have always wanted to have some levels of inflation, but it's always they always wanted to be able to control it. So they want a small amount of inflation to where it makes their spending or their old debt easier to pay off over time. The issue is that uh, it can easily get out of control if it goes too high. So high inflation is bad. It destroys the foundation of their economy. It destroys the savings and wealth of its nation and its people. And too low or even negative inflation or deflation is also bad because then the government, it makes it harder for them to pay the existing debt. So since the invention of fiat currencies, they've always wanted to have a low level of inflation, which they pegged at 2%. Now, when we look at the current state of other nations, so again, this is showing inflation rate by country, and it's sorted by the highest level to the lowest. Once again, we can see that there are way too many countries suffering from high inflation. In this case, Lebanon has 206%, which is insanely high. Sudan, Venezuela, Syria, and the list goes on and on and on. And you can see the number of nations that are suffering from high inflation is extremely, extremely high. Even in the United States, where we're seeing, I believe the last report was 8.6%, and many people are already suffering from increased prices in food. We've seen energy prices skyrocket, so gas becoming really expensive, rent has become expensive. So just the cost of living continuously goes up higher and higher, and that's with 8.6%. Now imagine living in one of these countries where the inflation rate is well above 10%, or some of these where it's gotten above 100%. You cannot hold any wealth And a currency that has inflation rates even over 20% annually, that just decimates any wealth that you have in a few years. So this is pretty crazy just to see how many nations are truly suffering from this. And last one I want to show is true inflation. So this is a recent application. It's a project that aims at trying to calculate what actual inflation or the cost of living is for people in the United States. And if you read the documentation, so if you go in here and go to the documentation, they explain their entire process, the basket of goods that they're measuring, where are they getting the data, how do they calculate everything. And they've done a really, really good job, in my opinion, at calculating the true cost of living or inflation. And I think it's substantially better than the CPI. I mean, I can make a future video as to why the CPI is a terrible metric to have, but this, on the other hand, is doing a much better job at letting us know as a consumer, as a citizen in America, like how much is inflation truly affecting us. And it's not going to be the same for everybody because there is no one inflation number that can affect everybody since we all have different lifestyles, we live in different areas of the country, and inflation changes depending on your location and as well as the items that you purchase. So there's no true one number of inflation that you can truly get. But this, as a general number, in my opinion, does a much, much better job than the CPI. And it's currently at almost 11%. So that 8.6%, it's almost 3% lower than what this is reporting. And you can come in here, you can check it out for yourself. You can see housing, transportation, what it's done. It's at a daily basis. And the only downside of this application is that it only started about a year ago. So the data does not go very far back, only until June of 2021. But I am very interested to see how this develops going forward. Now, I talked about all that, and I showed you all those charts, debt, inflation things that are going on around the world, because what I'm trying to get at is that there is a financial issue going on across the world. Now, I think the U.S. dollar is not going to suffer badly in the short term compared to all these other currencies, but eventually, over the long term, I think the U.S. dollar is also going to face a similar situation where people are going to choose to move out of the dollar, and we're already seeing signs of that. But it's going to be a slow, gradual process. So I don't foresee the U.S. dollar going into hyperinflation or these, incredibly high inflation numbers. In fact, I think over the next couple of weeks, we're going to see inflation in the U.S. slowly start coming back down, but I think it's going to stay relatively high or higher than what the Fed expects going forward. The Fed can't simply just create energy, which is currently the biggest issue that we're seeing with inflation. Now, I showed you all of that because the whole point that I'm trying to make here is that other countries outside of the United States, they're suffering from extremely high levels of inflation. Their currencies are collapsing, and I think this is going to continue over the next couple of years as we see this dollar being stronger and strengthened. It's just squeezing uh, essentially developing economies out, and the people within those countries that are suffering from these super high levels of inflation, they need to find a way to store their wealth. And my belief is that Bitcoin gives them an excellent option. And here's a report that shows the positivity towards cryptocurrencies. And this report uh, did a survey. It's on 27 nations, so this is not going to show every single country in the world, but of the nations that have the highest positivity on crypto, as you can see, is Nigeria, Venezuela, Ghana, and you can just continue reading. And one thing that's in common in here is that a lot of these nations are the same ones that are suffering from high levels of inflation. These are the nations that also, as we're going to see down below in a second, have high levels of corruption within their country. So they cannot trust their governments and they cannot trust the currency within their own country. So they're seeing cryptocurrencies and Bitcoin as a solution, as a way to protect themselves from the corruption and this high levels of inflation. And here we can see the the levels of corruption. So the highest one is would be Nigeria, uh, for positivity versus the corruption. So the lower the number is on this side, the more corrupt they believe, the people on the survey believe their nation is. And you can see Venezuela, high levels of positivity, and again, very high corruption levels. And you can just go down the list. And once we get to the developed nations, you can see that their positivity in cryptocurrencies is lower, but the corruption on the governments is also much lower. This last chart, we see once again the transparency rank. So, what do they believe? How corrupt they believe their government is, and how much are cryptocurrencies being used for remittances within their country. You can see the Philippines is pretty high. Then we have Vietnam, Ghana, Mexico, and once again, the developed nations tend to be at the bottom end, and that's because developed nations have many financial or efficient financial systems currently. So there's very little need for somebody in the U.S. to use Bitcoin as a form of payment or some stable coin as a form of payment when most of Americans have access to a credit card or a debit card or a bank, and they can easily make a transaction. But most people around the world don't have the flexibility. They don't have those accesses that we take for granted here. And that's why we're seeing cryptocurrencies really take a leap with that type of person. Lastly, we can look at some Bitcoin on-chain analytics. The So this is the number of addresses that have been holding Bitcoin for more than a year, and we can just see this has steadily continued to go up regardless of what the Bitcoin price is. So long-term believers in Bitcoin have continued to add to their position, and they continue to hold year over year. And more people continue to join the network. So this is what is showing. Currently, there is a little over 28 million Bitcoin addresses that have held Bitcoin for more than 1 year. And then we can also see the total addresses within the Bitcoin network that had some Bitcoin. So these are just the people that continue to create new addresses, join the network, and add a little bit of Bitcoin into their Bitcoin wallet. And we can see this number has also steadily gone up. And the only time it really had a spike down was after the 2018 cryptocurrency crash. But otherwise, it has steadily gone up over time. And the one thing that these on-chain analytics are not able to really capture is all the people that purchase Bitcoin through an exchange. So if you use Coinbase and you have your Bitcoin in Coinbase, so you never send it to your own personal wallet, then you will not show up in these metrics. And it is my belief that there's a lot of people that have always or have kept all their Bitcoin or their cryptocurrencies in a centralized exchange. So unfortunately, we're not able to capture those data points or these metrics correctly. So there's a gap in knowledge just because of the centralized exchanges. But overall, just looking at the on-chain data, we can see that adoption continues forward, regardless of what's going on with the price. So this is good. Lastly, we have a report on Bitcoin from Fidelity Investments, which is one of the biggest financial institutions in the world. And the one part I just want to highlight here is the comparison between the different source of value. So in here, they just have gold, Bitcoin, and fiat currencies. Once again, fiat currencies is everything from like dollar, euro, peso. So whatever government currency is issued, that would be a fiat currency. And you can see the different aspects or properties of each one of these store values, and they have a brief description in here. And compared to all of them, Bitcoin performs the best except for the track record. So this is where gold shines because gold has been a store value for thousands of years. It has proven history record, and it's always going to be in demand. Even if it's not for money, jewelry and industrial purposes, gold has value and utility outside of money. So that's really good. On the other hand, Bitcoin is relatively new. It's only been around for about 13 years. Fiat currencies are also relatively new. So before that, we were in the gold standard. So fiat currencies haven't been around for a ton either. So fiat currencies don't have a very good track record either. So with that, you can see how Bitcoin, shines in many aspects of this. And maybe in a future video, I'll go and I can discuss each one of the properties and how it shines or compares to the other ones. But for now, I just wanted to emphasize why I personally believe that Bitcoin is good as a store of value. I'm gonna link the report in the description below, so you can take a look at it in detail if you like. All right, that turned out into a much longer video than what I wanted to make. And this was really meant to be just a very light introduction into the whole topic. And I'm going to add a lot of resources on the description. I believe that if you find this information interesting, if you want to learn more so you can protect yourself, then you should look into these resources. They're completely free. I'm not affiliated to them. I just think they do a good job at explaining the situation. And as I was editing this video, there was also a podcast on what Bitcoin did with Preston, and he did a phenomenal job at explaining a similar area, like similar issues that what I was trying to talk about here. And he did it using kind of like the Monopoly game, so it's easier for pretty much everybody to follow what he's saying and understand. So I'm going to link that podcast down below. And once again, I have no affiliation with any of those links. I just think they're good resources for you to learn more about the situation. And once you learn more, I think you'll come to naturally see why Bitcoin is such an important asset. Make sure you like and subscribe to the video. It really helps out. We're just starting out, and I have a lot of good content coming up. One of the next videos I want to make is just looking at different valuations for Bitcoin. So what are some of the top analyst models predicting that the price of Bitcoin could potentially be? And we'll analyze the IRR on that.